How's the market? Well, the hangover from those interest rates almost doubling has taken a lot of the froth off the market. Let's see what it's done for homes here in South Orange County for our July 2022 housing update. I'm Jim with the Bishop team, Berkshire Hathaway, HomeServices, bringing you the latest and greatest on the South Orange County market. Make sure to like and subscribe so that you get these updates on a frequent basis. Let's dive in. From an inventory standpoint, that's our supply. We have about 1,300 homes for sale compared to 1,000 at the beginning of June. So 30% increase in just a month. Inventory is rising, but it's still below pre-COVID levels. So while the number of homes is up 57% compared to 2021, which is when the market was completely on fire and there were no homes for sale, we're down 54% from 2019 for a pre-COVID comparison. In 2019, there were 8,300 homes that had been listed year to date versus about 6,500 year to date 2022. So that's about 22% fewer homes coming on the market, so constrained supply. So that leads us into demand. The number of homes in escrow is down to about 740 from over 900 at the beginning of June. So demand measured by the number of buyers going into escrow is declining, and it has been since April. There were about 1,051 homes for sale in April at the peak of 2022. Number of homes in escrow in 2022 is down about 44% from 2021, again when the market was on fire, but it's also down about 41% from 2019. Keep that number in mind a little bit later when we talk about the second half of the year. So while supply is down, demand is down as well. So that leads us into our market index, which is the ratio of homes for sale and homes in escrow. So we are up to about 1.76, which means there's one home in escrow for every 1 3/4 homes for sale. As you may remember from past months, since November of 2020, we had been in an inverted index, meaning there were more homes in escrow for every one that was for sale, and then recently we flipped back to more homes for sale than in escrow. Now 1.76 is still relatively low. We're just starting to see the months of supply, that's another way to look at it, rise. We're seeing less than 2 months supply, which is still a seller's market from traditional standards, but it's different than the 2-week supply that we saw a year ago. And for comparison back to the beginning of 2019, the market index was 3.3. meaning there were more than 3 homes for sale for every 1 in escrow, and remember we're now at 1.76, so about half of that. So still not a buyer's market, but getting towards a more balanced market. What does that do for pricing? Well, let's dive into that. As interest rates have risen, supply has risen a little bit, demand has fallen. There's been a lot of buyers kind of standing back and sitting on the fence and waiting to see what happened to prices, expecting 20-30% drops like in 2008. Stephen Thomas, who's the local economist that analyzes the Orange County market, is looking more at like 3 to 5%, but let's also put that in perspective. Earlier in the year, in April was up 30% over last year. So if you drop 3 to 5%, you're still up significantly from where you were, just down from the peak. So that could be the time to look at buying if you are doing that. In fact, we did see in June that 5 of the South Orange County cities that we track had prices go up and 7 had prices go down. The net for South Orange County was a 3% decrease in the average dollar per square foot for pricing. So that's the first time in a while we've seen a decrease. So some of the market dynamics that kick in this scenario as interest rates go up and buyers are anticipating the motivated sellers, they might have to sell less than the last comp. That's the 3 to 5%. And for whatever reason, they're moving out of state, they've bought a new house, moving up, moving down, and they have to sell. They're gonna be more motivated to work with the buyer and put the deal together. But what happens in that same scenario is other sellers who don't have to sell will often take their homes off the market, decreasing supply while the demand of the buyer sitting on the fence is decreased. And so you reach an equilibrium. Buyers start coming back into the market as financing options come available, 7/1, 10/1 ARMs, things like that make their payment lower. And then sellers come back into the market and we reach a new equilibrium. That's what we're predicting in the next couple of months with some turbulence. Keep your arms and legs inside the vehicle at all times because we could have some bumps, but nothing major like 2008. So with the number of homes in escrow down 41% from pre-COVID 2019, you are going to see sales, the number of units, start to taper off. Right now, we're 2% ahead of 2019 year to date from the first half of the year, but with the number of escrows down 41%, those numbers will start to lag 2019. So what that means for buyers, you're not competing against 27 different offers, and you actually may be able to take a little bit of time to look at a house, think about it, see it at night, see it more than once, and not have to make a decision in 7 seconds whether you want to make an offer. And sellers, you're going to be on the market longer. You're not going to have 25 offers. It's going to be more balanced and more normal like we've had in the past. That's why it's important to work with agents like us who have seen the up and down markets, know how to navigate and help you, whatever side of the table you're on, get to where you want to go. If you have questions about your specific home, maybe that you're looking to buy, looking to sell, give us a call. That's what we're here for. I'm Jim with the Bishop team, Berkshire Hathaway Home Services, California Properties. Make sure to like and subscribe so you get all these great updates here on your local real estate market.